What's up, YouTube? Welcome back to the Coinist channel. Hit the subscribe button down here if you're new. Have a quick video for you today. With the DeFi narrative raging on, the bull market is still going, and a lot of people are trading on Uniswap. It's doing more volume each day than even Coinbase in some markets. It's pretty significant, right? There's a lot of people trading there, but the first question they have is, how do I find new projects? What are the easiest things I should be thinking about? How do I look for these trades, right? What's kind of a rule set or a strategy to follow? And I spoke with a trader on my podcast recently. His name's Crypto Messiah. You can watch the full episode right down below. It's one of the most watched episodes this month, but I wanted to simplify this video for you today and just give you 5 things, 5 very simple tips that he had in his experience. He trades on Uniswap almost full time. He works with a trading group of like 5,000 people who spend all their time on Uniswap as well. And he's done pretty well for himself. So I think these 5 tips will be helpful. It's a very good starting point, and it also highlights some of the things we talked about in the video. If you want to listen to the full podcast, like I said, link is down below. If you like this video, like, subscribe, comment. You guys are crushing the YouTube. It's a lot of fun to make these when you're all watching. Enjoy the clip and trade well. I'll see you guys in the next video.
As people are listening to this, they're on the DeFi train, I imagine, already. They're just saying, how do I get involved in this? What's the starting point, right? They're now probably going to look at some of these meme coins and say, I found the next meme coin, or they're going to listen to this and say, how do I find my edge?
Well, I'd say that depends on a couple of factors. The size of your bankroll is very important because, that's going to determine where you actually want to allocate your funds. If I'm trying to make myself into somebody from nobody, then I probably am going to want to have a riskier approach to all of this. I'm going to want to play the pumps. I want to mess around with compounding on Uniswap. Kind of a more degenerate approach. But as I said before, I come in with $10 million in the game, and somebody's going to give me 30% APY. I'll milk that all day. That's huge money for me. So I think that's the first question you need to ask yourself. People are participating in these yield mining experiments with small bankrolls, and yield farming is very much tilted towards guys with larger bankrolls. I mean, just a lot like the mining industry. The guys that have the money, the latest equipment, are going to make the money. And if you're a small fish and you've got the last generation miner and you only have 1 or 2 of them, it's almost not even worth having it, right? You're better off putting that capital to use elsewhere. The number one thing, I tell people is that, a rising tide lifts all ships, of course. And if I was a total crypto noob and I was coming in, I think the best thing to do would just be to get exposure to some of the projects that are more accessible to everybody, not take too much risk, because for everybody that you see on Twitter saying that they're killing it on Uniswap, trust me, there's 100 people that aren't, maybe more, because, this is a zero-sum game. Somebody's losing money here. And what a lot of people don't understand, too, is the concept of impermanent loss, which is something that has arisen from these automated market-making protocols. And just put simply, what it means is that on Uniswap, the pools are 50-50 balance. The asset being traded and then the base token, right? The US dollar amounts of these assets are perfectly balanced. They're equivalent, So here's what happens. Let's say rather than being a liquidity provider, and all these markets are going crazy, right? So rather than being a liquidity provider, I'm just a holder and I hold this token, right? I've got 100 of this token. It goes up 5x. I've still got 100 of this token, but it's worth 5 times as much. Now, I'm a liquidity provider, and here's where people are getting screwed, especially people that don't know what they're doing. I'm a liquidity provider, and the market goes up 5x. So what happens is, those 100 tokens, that I had up here, are now shifted towards the base pairing. So by just because maybe I've got 20 tokens after that 5x. I've got more Ethereum, right? That's great.
Tons of Ethereum.
I've only got 20 tokens. So impermanent loss is the concept of, being significantly outperformed by just people that are holders of something in a market that's trending upwards. Being a market maker in any market, these guys at a centralized exchange, if an asset is uptrending rapidly, they're not going to continue to provide the same liquidity with the same characteristics on the way up. Like, they'll skew the liquidity.
Sure.
There's ways for them to manage that risk. But on an automated market making protocol, when there's a 50-50 distribution of liquidity and it's bidirectional, like, the liquidity doesn't change on the way up. It's just always there. So you have to be careful about that. So some people that have kind of revolutionized that game, Balancer, have provided the ability to have skewed liquidity pools. So maybe it's 95% of whatever you're trading versus 5% of the base, which is a strategy that gives you exposure to the fees from market making, but also you suffer much less in permanent loss on the way up, or there's 80-20 pools or things like that. So there's definitely like a lot of innovation, that's coming into this space, and there's different exposure strategies for the people that do just want to be delta neutral, essentially, that want to gain fees or whatever. But at 95.5, you're not exactly delta neutral. You're maintaining pretty heavy exposure to whatever asset that you're holding. This stuff is all extremely confusing. That's one of the biggest roadblocks to it. And I think the easiest way to simplify this is to just break it down to its simplest components. You've got markets that are trending. You want to go look at the ERC20 contract. If it says token builder on it, get out. If it says, hey, this contract is, because it'll tell you, hey, this is an exact match for this other contract. Like,
that's a clone. Yeah.
Check out who's the team. Are these guys doxed or are they not? If they are, or if you Google image search their images, are they showing up as 100 different people on the internet? That's a red flag. Is the project novel? Then it might be worth taking a punt at. Now, you spoke about the rug pull earlier. And what a rug pull is these devs will list a project, and let's say that they'll list 1 million tokens and 10 Ethereum, right? So the project 10x's, and now they've got much less tokens, but they don't care about the impermanent loss. They know their token's dog shit. The only thing they care about is being shifted towards Ethereum. So when it gets up to here, what they'll do is they'll pull the liquidity from the exchange, and it doesn't matter that the project is 10x. The only thing that matters is that they've taken impermanent loss. They're been skewed towards Ethereum now, and now they're pulling this liquidity. They don't even have to sell. So it creates the situation where, oh my God, I thought I was rich. I thought I had a 10x, but now there's nothing for me to dump on.
Yeah.
And who in their right mind would provide liquidity? So now you've got a market that on paper I'm 10x, but theoretically I'm kind of at a stalemate here. I can't really do anything.
Now you're back to the 2017, 2018 situation. The token pumped. It's a massive wake-up, and it's a game of who can dump quicker, but there's not even anyone to buy.
So what happens when I provide liquidity on Uniswap? In return for providing that bidirectional liquidity, I get Uniswap V2 liquidity provider tokens. And those tokens are a voucher for that liquidity. And to redeem that liquidity, I need to redeem those tokens for the assets that I put in to provide liquidity. So the solution to rug pulling, and this is what a lot of people are doing, I know Unicrypt is one of the main places that is doing this right now, but there's also Open Zeppelin has made available time lock contracts and things like that, where developers will actually send tokens to their liquidity provider tokens to a time lock contract, and they'll say, you're not going to get rug pulled because I put a 6-month time lock on this liquidity, and I don't own these liquidity provider tokens anymore. So even if I wanted to redeem this liquidity, that I provided, and fuck you guys, I can't because I don't have access to the tokens I need to redeem the liquidity. And that's kind of been, when people join a project, they immediately will now demand dev lock liquidity, lock the liquidity, people won't shut up about it, but it's a good thing. It's people fighting for themselves and fighting to not be scammed, because there's so many scammers out there, so many clones, and people trying to take advantage of people.
If there wasn't that, there wouldn't be the opportunity for 5x, 10x, 100x.
I mean, literally,
you get paid for the risk you take.
When the dev locks, because here's the thing, I can come in and I can be a total degenerate and I can buy a project before the liquidity is locked, and there's a good chance that if the dev locks that liquidity after I buy that project, like I'm going to get X's on it because I bought in when that liquidity lock wasn't priced in yet. That security that locking the liquidity provides is something that will be priced in, because now people do feel confident in investing and knowing that they're not going to get rug pulled. But is that a great strategy? Hell no, because come on, you're gonna get rug pulled doing
eventually.
That.
Yeah.
The safest thing to do, and I verify this a lot before I buy something if it meets my criteria, which is I need something with significant liquidity. I want something that's a certain market cap, because a $1 million project can go to a $10 million project a lot easier than a $500 million project can go to a $5 billion project. There's totally different forces involved there. Okay. Retail can drive a 1 million project to a $10 million project, whereas it takes a lot more money to do that with a $500 million project. So the people that are looking to take advantage of these compounding gains and make some money in this, you need to look and see if that liquidity is locked as an initial filter. You don't need to be an extreme degenerate because even then, I mean, if you're just banging out 2x's left and right, I mean, through compounding, the gains could be absolutely absurd here.
You're going to do pretty damn well. All right, so the biggest
guys, seriously.
Biggest takeaways for me so far for people that are looking at the Uniswap meta, at the Uniswap strategy this weekend, they're going to be digging in. Is novelties, looking at projects that are new in some way, right? Finding the replicas, it could do well if it's the theme of the week, but overall those pumps are going to get watered down. Second thing is looking for liquidity lock, making sure you're not buying something with a contract that's just going to totally shit on you. What's the last thing if you give people one more piece as they go for the weekend? And this can be a meta thing. This can be a small thing to manage risk. It can be something.
I'm actually going to give two pieces because I feel like we need two more to complete the picture.
Go for it.
So the first piece in there is that there's more ways, aside from a rug pull that you can be scammed on these ERC20 contracts. Another one that's very common is a mint function. I know most people watching this probably aren't programmers, and that's okay. You don't have to be a programmer. But if you go to Etherscan and you go to that contract and you click on that contract address, and then you go click on the contract, the source is there. It's available for you. Control F, okay? Or I don't know what the Apple command is. I'm an I hater, but whatever the equivalent is on Apple.
It's like an Apple looking button plus F. Same
Apple,
kind of thing.
Apple F, Control F, guys, and type in mint, M-I-N-T, because you want to make sure that you're not buying something where there's a mint function in the smart contract. Because if that guy that deployed that smart contract has admin keys and he can access this mint function, what he can do, he can lock that liquidity, pump this shit 10x, and then quadruple the supply and dump on you just by calling this function and give himself all the coins. Now, some projects do need a mint function, but if there is one, there better be a very legitimate reason for there being one. I mean, if you've got a token where there's no reason for a mint function and it exists, that's a huge red flag. So make sure that mint function is not in there, guys. Make sure it's not a clone. Or make sure that the contract has a name. If the contract name is token voter, get the fuck out of there. Like these guys, that's not proof of development. If these guys can't even deploy a basic smart contract to the Ethereum blockchain, they're not developers. Okay. And I'm not going to invest in any project that a developer is not involved with. Now, number 4, and I think this will give you a pretty well-rounded place to start.
Yeah.
When I look at a project, I want to look at it, and within the first 10 seconds, I want to be able to answer the question, how is this going to make me hilariously rich? And I know that sounds funny, but it's a valid question to ask, because if the project can't sell itself and can't put off that vibe to you and do it quickly, then it's not going to put off that vibe to anybody else. If you want to FOMO for any other kind of reason, that reason might be exclusive to you. Hey, we're an art project. Maybe you're a big artist, so that speaks to you. Oh, I'm going to invest in this. But think about this. How many other people are going to be touched by that thing that you're touched by? Everybody's touched by money. Everybody. I don't care who you are. So I look at a project, and a project's not going to normally say, we're going to make you rich as hell, right? But you have to get that vibe looking at it, that this is super hype. When noobs are going to look at this shit, when anybody's going to look at it, that narrative exists, and the project marketing team has positioned itself to put off the vibe that this is hot. This is going to make you money. No matter what they're hiding behind. If the team isn't about pumping the coin, then you shouldn't buy the coin. Period. So always ask yourself that question. Is this going to make me hilariously rich? I hang out in the trading pit, which is the hero chat room all day. There's Uniswap degens all day, talking shit, throwing out coins and memes or whatever. And people all day are saying, hey, take a look at this, take a look at this. And look, like a lot of like big follower guys will just say, fuck off. I'm not talking to you. My audience is like my bread and butter. Like these guys are doing so much work for me, and they're helping me to find all of this stuff that I can then, it takes a lot of fucking time, like don't get me wrong, but if I have the patience and I have the ability to actually dig through these things. I can't tell you how many fantastic plays I've made just because somebody says, hey, take a look at this. I'm like, the fuck is that? I go check it out. And I'm like, oh, I'm getting out my ledger. Like, I've got to get in this right now. But, it's like somebody said yesterday or the day before, hey, take a look at this. And it was like some token to where they were going to reward people with their token for watching gamers stream online. I looked at it and I said, well, how the fuck is that going to make me rich? Is it a cool idea? Yeah. But is that going to make me rich? Like,
no,
probably fucking not. And it's anybody can answer that question. Okay. It's not a hard question to ask.
Hey guys, hope you enjoyed that clip. If you do want to watch that full episode, the link is right down below to check that out. I know some of the tips are pretty basic, but it's a really good starting point. But also some interesting points about the automated market making system and impermanent loss that I didn't know about before. And I think Messi did a pretty good job of explaining it so every single person can understand. If you have any more questions about Uniswap or just want to share what you've learned or trading there, comment it down below. I do want to hear it. And also go check out crypto.com. They sponsor these daily videos and they have a feature on there called Crypto Earn. And it lets you earn interest on the coins that you hold in your app right there. It's super simple. Download it on your phone right down below. Hit the link. They sponsor these and help me make these videos for you guys. So check them out. That's all I got. I'll see you guys in the next video.